Hi, so for today, we're going for Chapter 5, the Activity-Based Costing System. We call it ABC system. So for this chapter, we're going to talk about some basic of activity-based costing and then apply the ABC system and understand the benefit of limitation of the activity-based costing. We're also going to give some examples regarding how to calculate it and explain the cost flows in the ABC system and understand the quality cost. Okay, so we're going to start our course today. The overhead costs, before we move on, the overhead costs cannot be easily traced to the products. Using a plant-wide predetermined overhead rate as described in Chapter 2 is super simple, but may inaccurately assign the costs to product. The activity-based costing is an alternative that attempts to accurately assign overhead costs to products for financial reporting and other purposes. So plant-wide overhead rate. That means when cost systems were developed in the 18th, the emphasis was on simplicity because cost and activity data had to be connected by hand, and all calculations were done with paper and pencil. Most companies produced a limited variety of similar products, so there was a very little difference in the overhead costs consumed by each product. In the interest of simplicity, companies often established a single overhead pool for an entire factory that used direct labor as the allocation basis. Direct labor was the obvious choice because direct labor information was already being recorded. And direct labor was a large component of product costs, and managers believe direct labor and overhead costs were highly correlated. Conditions have changed in the 3 ways. Okay, so the 3 ways has been changed. Most companies sell a large variety of products that consume differing amounts of overhead. And then as a percentage of total cost, direct labor has been shrinking and overhead has been increasing. Many of growing overhead costs may not be correlated with direct labor. Technology advancements. Technology advancements have reduced the cost and complexity of gathering the device source of data. So these changes suggest that the plant-wide overhead allocation system may not be optimal for many companies in today's business environment. The departmental overhead rates. Many companies use departmental overhead rates instead of a plant-wide overhead rate. The nature of the work performed in a department will determine the department's allocation base. Say for example, overhead cost in the machine department may be allocated using the machine hours. Overhead cost in the assembling department may be allocated using direct labor hour. So it's different, right? So with some different examples of activity-based, we could including the number of customers served in the pizza store, or a number of patients treated in the hospital, or number of cars served in the workshop. So those are different kind of activity bases. Department overhead rate will not correctly assign overhead cost in situations where a company has a range of products and complex overhead costs. This is because the departmental approach relies exclusively on volume-related allocation basis. Some overhead costs may be caused by factors that are not related to the volume of production. So this approach, such as activity-based costing, is required to account for these other factors. The activity-based costing. So we're going to talk about this. The ABC, activity-based costing, is a technique that uses numerous allocation bases in an attempt to assign overhead costs more accurately to products than the plant-wide and departmental approach. We had discussed it before. So the basic idea of ABC is a customer order triggers a number of activities. Performing the activities consumes resources. The consumption of the resources incurs costs. So we can see from the slides, right? The cost projects will be the clothes, and the customer order requires for those products. And then when the company receives the product's order, they can go for activities for scheduling, sewing, inspection, and shipping. And the final activities will be the consumes for the labors, equipment, energy supplies, all the costs. So the resource costs money. Now, the key terminology for ABC is an activity in ABC is an event that caused the consumption of overhead resources. Examples of activities including setting up the machines, admitting patients to a hospital, billing customers, or opening the account at a bank. Those are all the activity. An activity cost pool is a cost bucket in which costs related to a particular activity are accumulated. So that is we call activity cost pool. An activity measure expresses how much of an activity is carried out, and it is used as the allocation base for applying overhead products and services. Activity measures can be related to volume or not related to volume. Activity rate. So activity rate is a predetermined overhead rate in activity-based costing system. Each activity has its own activity rate. Taking each activity in isolation, this system works exactly like the job order costing system that we talked about yesterday. A predetermined overhead rate is computed for each activity and then applied to jobs and products based on the amount of activity consumed by the job or product. So we can see from the slides, the predetermined activity rate equals estimated activity cost divided by the activity volume. So the result overhead costs are thereby assigned to the cost object based on the cost object's assumption each activity. We're going to go through some examples later. Design an activity-based costing system. Design an activity-based costing system. We need to make sure the design decisions. In most companies, hundreds or even thousands of different activities cost overhead costs. The challenge is to select a reasonable small amount of activities that to explain the bulk of the variation in overhead costs. Activities are usually chosen by interviewing a broad range of managers to find out what activities they think consume most of the organization's resources. Related activities are frequently combined to reduce the amount of detail and record-keeping costs. Let's give some examples. So for example, several actions may be involved in handling and moving the raw materials, but this may be combined into a single activities we call material handling. So you can summarize it and make it a smaller pool. An activity dictionary. Activity dictionary defines each of the activities that will be included in the ABC system and how the activities will be measured. So that is activity dictionary. Now we talk about there's 7 steps from our slides. You could see there. To design a ABC system, you identify activities and create an activity dictionary. Create activity cost pools, identify the resources consumed, identify the activity measured, estimate the total activity volume, and compute a predetermined activity rate. Then allocate activity cost to desired cost objects. So now the next we're talking about hierarchy of activities, which is a common framework for combining activities in manufacturing companies. We can see that activity types. There are unit level activities, batch levels, product level, and facility level. So for example, for unit level activities are performed each time a unit is produced. For example, providing power to run processing equipment will be a unit level activity. Batch level are performed each time a batch is handled or processed, regardless of how many units are in the batch. For example, setting up equipment and shipping customer orders are batch level activities. Product level relate to a specific products and must be carried out regardless of how many batches are run or units produced and sold. For example, designing or advertising a product will be a product level activities. Facility level activity are carried out regardless of which customers are served, which products are produced, how many batches are run, or how many units are made. For example, heating a factory and cleaning executive offices are facility level activities. So I want you to make sure that which one belongs to which activities, because you will see those kind of questions in your homework or quizzes. So we have examples of our ABC system flowchart. In the first stage, you can see that there are two stages. In the first stage, overhead costs are assigned to the activity cost pool. For example, the production order cost pool could include the salary of engineers who modify the products for individual orders and the cost of scheduling and monitoring orders. Okay, production schedule. We'll see from there. In the second stage, the cost in the activity cost pools are allocated to product using activity rates and activity measures. For example, if the total cost in the production order cost pool was $450,000 and the company expected to process $1,200 order, the activity rate would be $450,000 divided the 1,200 order. So that would be $375 per order. So this is the numbers how it's come out. When you take a look at the stage 1, production scheduling, the number of order will be $375 per order. Each order will be charged $375 for production order costs. So that is how this flow chart works. Now we're showing some examples. Now, how to use the activity-based costing. The examples I want you, maybe you can quickly write it down, or because we're gonna quickly go through it. So the Cool Feet in company makes in particular two products, a runner dog and feet watch. For the current year, Cool Feet has budgeted sales of 50,000 runner dog and 200,000 feet watch. Both products require 0.050 direct labor hours to complete. The company plans to work 500,000 hours to meet budgeted production of all its product. Direct material cost 40 per unit for runner dog, 20 for the feet watch. Direct labor cost $5 for both product. Okay. So first, direct labor hour as a base. The total manufacturing overhead cost for the current years are estimated to be $10,000. The company developed the following overhead rate based on the labor hour, because we already know the 500 direct labor hours. So the predetermined overhead rate, always the first step, we need to calculate it, is $10,000 divided by the 500,000 direct labor hours. So that's $20 per direct labor hour. Then you need to list it for the two different products, right? So you list your products, runner dog, and then the feet watch, and then you put your direct materials, direct labor, manufacturer overhead, and united products costs. So that's what I always emphasize on the lecture, because you need to follow the layout. Then that will be easier for you to follow the question, because you have a lot of information in your question and you want to lay out all the information you already know. Okay, so follow the layout. First of all, you know that direct materials 40, direct labor $5, manufacturing overhead, you use your predetermined overhead rate times 0.5 direct labor. That's what's given from the question. So it's 10. And then unit product cost, you will see $55 for run a dog, $35 for feed watch. Then, let's see, for different activities, right? You can see the different activities. So the ABC project team at the company developed the following basic information. Those are the information was given from the question. So for example, activities and activity measures, you have assembly department, the assembling activities, not department, but activities. So assembly activities by using the direct labor hours as activity base. So you use your direct labor hour. For run a dog will be 25,000, and for field watch is 100,000. Then the other product will be cost 375,000. Your estimated overhead cost for assembling will be $800,000. Okay, so following all those, the $10,000 was given, right, from the question, and then it's separated by each different activities listed in there. Now, when we have all this information, what we need to do. So the first, what we need to calculate it, the activity measures for each activity is stated. So the quantity of activities measured consumed is shown by product line. The activity rate for each activity cost pool was computed. Now the overhead costs, we could see, for example, assembling. Assembling, the overhead estimated cost is $800,000 that was given. And the total estimated activity volume will be 500,000 direct labor hour. So you can calculate your activity rate, use A divided by B, you have $1.60 per direct labor hour. So we could find these numbers from the slides, right? So we have our $800,000, we have 500 as activity base. And then we have our activity rate. Then similar calculation following for machining, and then machine setup, production scheduling. Using the new activity rates as assigned overhead to the product based upon the activities. So we have finished all those calculations as the activity rate. We go to the next slide. Now, when we take a look at run a dog and feed watch, because we know that the volume is different between those two products, right? So assembling, we have calculated at 1.6 per direct labor hour. Then our runner dog will spend 25,000 hours to produce the product. So the total will be 1.60 times $25,000. You get 40,000. The same calculation will follow for feed watch, 100,000 volume, direct labor hours, times the 1.6 is as the activity rate. So you have $160,000 as a total amount. When you finish all those total amount, using the rate times the expected volume for each of the activities, you have your total overhead cost assigned. And you have your total cost assigned to feed watch. Then the number of units produced was given. 50,000 for run a dog, 200,000 for feed watch. Use A divided by B, you have overhead cost per unit. So the overhead cost per unit, $27.78 for the run a dog. And for example, we already know how the calculations, right? Just following the rules. Now, when we finish all those overhead costs per unit, you can see the next step. So, activity-based costing. Run a dog, direct materials 40, feed watch $20, direct labor 5.5, manufacturing overhead, which is calculated $27.78, feed watch $6.26. So you have your unit product cost $72.78 for run a dog, $31.26 for feed watch. Then you comparing with the direct labor based costing. Everything is the same, but we see that the manufacturing overhead is $10 for each of the products. Our unit product cost is $55 for run a dog and $35 for feed watch. It's much higher. than the ABC. So when they comparing the two approaches under the ABC, the unit product cost of runner dog and feed watch are $72.78 and $31.26 respectively. Under the traditional approach that we just showed for direct labor base, we had computed unit product costs for 55 and 35 respectively. So notice that the direct materials and direct labor cost under the two approaches are the same. The differences in unit product costs result from the two different approaches to assigned overhead costs. Right? The ABC system assigned $3.75 less in overhead to feed watch than the traditional system. We use $10 divided by 626. The ABC system assigned $17.78, difference between $27.78 and $10, more in overhead to each runner dog than the traditional system. So 27 minus 10. Then we go to see that the activity-based costing shifts the costs from the high volume products to low volume products. This results from the existence of batch level and product level costs. For example, considering the production order activity cost pool, the traditional system assigned the same amount of all overhead costs, including the costs related to the production orders, to each runner dog and feed watch, right? It's $10 per unit. However, the ABC system assigned a different amount of production order related overhead to each product. So the costs are being shifted. So we have to emphasize that the costs are being shifted from the high volume, which is feed watch, to the low volume product, which is runner dog. So that is the difference between the two different systems when you calculate it. Now, activity-based costing has also been implemented by various service organizations. We have mentioned in our textbook, such as the banks, hospitals, cities, and data service companies. Successful implementation of our ABC system depends on identifying the key activities that generate cost and tracking how many of those activities are performed for each service the organization provides. Now, we'll move on. Almost there. Evaluation of activity-based, so the benefit of ABC. The benefit of activity-based costing. ABC improves the accuracy of product cost in 3 ways. First, it increases the number of cost pools used to accumulate overhead costs. Number 2, it uses activity cost pools that are more homogeneous than department cost pools. Number 3, assign the overhead cost using activity measures that cost those costs rather than relying solely on labor hours. Some activity measures may be unit level in nature, but importantly, others will be batch level, product level, or facility level in nature. So the one we just talked about, the production ordering, that was on there, the batch level, right? ABC also assists with better cost estimation. Increased accuracy in overhead allocation means that companies can do a better job of estimating costs. Activity-based costing can be a valuable tool in providing relevant cost information to managers, in identifying the target cost, and also in monitoring a company's progress toward achieving the target costs. ABC highlights the activities that could benefit most from improvement efforts, resulting in greater emphasis, efficiencies, or lower costs. This is the most widely cited benefit of the ABC system by manager. When using this manner, it is often called activity-based management. Okay, so that's what we're talking about, is the ABC management. Now, when we talk about the limitation of ABC, the cost of implementing an ABC system may outweigh the benefits because it's going to cost much. However, the benefits are more likely to be worth the cost if, first of all, the product differs substantially in volume, batch size, and in the activities they require. Second, conditions have changed substantially since the existing cost system was established. Number three, overhead costs are high and increasing, and nobody seems to understand why. And number four, management does not trust the existing cost system, and it ignores data from it when making decisions. So there's some critical assumptions for ABCs that the cost for each activity pool is strictly proportional to its activity measures. When this assumption is violated, the accuracy of ABC data can be called into questions. So we can see that for different companies, they have thousands of different activities. So it's really critical for the people to define all those activities for the company. That's the limitation. There's also Appendix 5A to talk about the cost flow in the ABC system. We'll just quickly go through this because it's in the appendix. It's not in the taxes. So the flow of cost in the ABC system is essentially the same as in the traditional cost system. The only difference is that ABC system consists of multiple predetermined activity rates as compared to the single rate. And 4 categories of quality costs. The term cost of quality is rather confusing. It does not refer to such costs as higher grade leather to make a designer wallet. Instead, it refers to all the costs that are incurred to prevent poor quality, and those are incurred because the poor quality exists. So there are 4 costs that must be considered with respect to poor quality. First of all, prevention costs, costs associated with activity aimed at preventing future defects or errors. Appraisal costs is the cost associated with quality inspection activities. Internal failure costs is the cost associated with the activity carried out when the defect is discovered before the product is delivered to the customer. External failure costs is the cost associated with activity undertaken after the error is discovered by the customer. So talk about the different quality costs interact. Prevention cost is the best way to manage quality product is to ensure that they never happen. This means that organizations must put systems and procedures in place to ensure that quality product problems do not occur. Another example we see for internal failure costs are incurred when the output fails to meet the specification. Moreover, the organization must investigate why the internal failure occurred in the first place. This also consumes resources and costs. So very similar for the external failure costs. Now, distribution of quality costs. The quality costs often exceed 10% of total sales, whereas expert says that their costs should be more in the 2 to 4% range. The task of reducing the quality cost often begins with greater attention to the appraisal category to identify the nature of the quality problem, for example, the nature of defects, and then to investigate the root causes of the problem. Then correct actions are taken and preventive measures put in place. So those are the cost of quantity. The cost, there's also, we talk about in our textbook in 14B about a cost of quality report. The cost of quality report are act as add to management to help the management. Quality costs are summarized periodically in the cost of quality report. Sometimes we call it as a quality cost report. So the report contains the detail of quality cost under the 4 categories of prevention, appraisal, internal failure, and external failures. In addition, the report expresses this cost in terms of the percentage of sales. This information is useful for the managers when they need to evaluate the effects of quality improvement programs, as well as in budgeting quality cost for the next period. So it shows samples of the quality cost report. So we can see that they're actually just show 2 different. They're just two different categories, but actually there are 4. So when you see the prevention cost, you see the system development spend a total money of $400,000, and the percentage is as the percentage of total sales is 80%, 0.80%. Right. So that's examples. If you are interested, you can read the textbook. They have a detailed explanation. So summarize. The chapter summary, we basically talk about the ABC costing difference from the traditional costing in the multiple allocation basis. And we also give you the examples to talk about the ABC system. And overhead is allocated to jobs using an estimated allocation rate and multiplied by the actual allocation base used. So if you still remember the examples we went through, was talking about different activities, right? We calculate different activity rates and you times the estimated activity. Then you have the total overhead amount divided by the products. You have your unit total amount for overhead applied. So the ABC costing provides more accurate cost, better cost estimation, and cost management. So that is for our chapter 5. Any question?